and welcome everybody. Apologies I can't be there in person, but hopefully I will be there in person for the next event. Just checking that you can see my my presentation up on the screen. Can someone confirm that for me, please?
Yes, we're good.
Excellent. Okay, so as Heidi said, I'm going to be providing an outlook for travel and tourism in the APAC region. So just briefly, I'll just give a quick overview of our company and what we're about. So Tourism Economics is part of the global umbrella company, Oxford Economics. So our role within the Tourism Economics division is to focus on travel flows, forecasting and economic impact work relating to the tourism industry. So we're made up of more than 25 economists, 25 economists operating out of the US, the UK, Europe, and myself in Australia. And each year we partner with over 500 companies and destinations for their research and their travel economics needs. Our umbrella company, Oxford Economics itself, has over 250 economists and industry experts all over the world. And in terms of what we provide, so we provide data subscription services with forecasts for travel between 180 countries, 300 cities, and we also produce specific air passenger forecasts in conjunction with IATA. We also provide bespoke consulting services, particularly those focused on custom travel forecasts and economic impact analysis relating to the tourism industry. So I guess to start off with, the key point I want to make is that the travel recovery is underway globally. So 2022 is the year where tourism has restarted in earnest. So there's still factors at play that are a drag on the recovery of the travel industry and introduce risks to the outlook. But overall, things have mostly restarted after the disruption of the last 2 years. So this chart here, this shows the number of domestic tourist nights globally in light blue and international tourist nights in dark blue. And what you can see from this is that domestic travel is expected to recover quicker than international. So domestic is expected to recover 2019 volumes this year, but international travel slower, so not until 2025. I should note at this point, these forecasts I'm going to be showing you today are what we put together in late March. So we're currently updating those. We couldn't get them done quite in time for this event. So you can expect to see a few downgrades from what I showed today, but overall, the main story still remains true. So before I dig more into the travel outlook, let's have a look at the global macroeconomic environment because it provides some context and it also helps to inform our forecasts and expectations for tourism. So at the moment, inflation is the key talking point in the global economy. So this graph here shows Oxford Economics forecasts for global GDP growth in the red line and inflation in the blue line. And these are the forecasts or the expectations for this year, so 2022. And what this graph shows is how these forecasts have evolved since the middle of last year, so on the far left of the graph, through to more recently on the right of the graph. So what you can see from this is that our expectations for inflation began to increase late last year, and we revised our forecasts higher in accordance. And this happened alongside the recovery of global demand and a squeeze on supply, including labor shortages. But the war in Ukraine this year has added significantly to those inflation expectations. So accordingly, we've revised our expectations for inflation higher consistently throughout the year. And alongside that, expectations for GDP growth have weakened. So we think, like, as a summary point, an accurate characterization is that uncertainty is high at the moment, as is inflation, and that uncertainty has increased in the past 6 months. But overall, we're hopeful that a global recession will be avoided. Now, energy prices have been one of the key drivers of inflation, as I'm sure you're aware, although there has been a contribution from labor shortages and supply squeezes. So oil prices have spiked this year, although I should point out that our expectations are for these prices to gradually come down into 2023 and 2024. Now, this spiking of oil prices will likely lead to some increase in airfares, and On longer routes in particular, this could deter some travel or some trips. And more broadly speaking, higher inflation could erode income and the expected consumer-led economic recovery. So while I noted that higher costs are most likely to affect travel via airfares, it's probably best to characterize these inflationary pressures as a headwind for travel, especially those longer haul trips. But it's also worth noting that because there's a lot of pent-up demand from 2 years of minimal travel and excess savings among consumers, we'd expect the impact of higher airfares on travel decisions to be smaller than would have been the case during previous inflationary periods. So in other words, the price elasticity of airfares is expected to be lower in the near term than has been the case historically. And this inflationary impact is offset somewhat by excess savings among consumers. So while real disposable incomes have been squeezed by inflation, as you can see from the chart on the left, in the chart on the right, you can see that excess savings among households in advanced economies are actually very high. And these savings essentially provide a buffer of sorts against the impact of inflation on travel spending decisions. So consumers are still expected to lead the recovery globally in economic terms, and this will flow through to travel, but there are risks posed by the increase in inflationary pressures. So now I'll return to the tourism industry specifically. So I've shown at the very beginning that domestic travel is expected to recover more quickly than international travel. But within international travel, we expect travel of different distances or hauls to recover at different paces. So short haul travel, which you can see in this graph in the dark blue bars, is between countries within the same sub-region. So for example, that would be travel within Northeast Asia, so say from Japan to South Korea, or say within Southeast Asia, so between Malaysia and Singapore. So this travel is expected to recover quickest in the near term because this type of travel is cheaper, there's less uncertainty about transport routes, and travel between neighboring or nearby countries is more familiar. And we expect travelers to prefer closer or more familiar destinations, generally speaking, to begin with after the impact of the pandemic. Medium haul travel is of slightly longer length. So this is between different sub-regions. So for instance, between countries in Southeast Asia and those in, say, Oceania. And long haul travel is between different major regions. So for example, that would be travel between, say, Asia and Europe, or Asia and the Americas. And long haul travel is expected to recover at the slowest pace because of the higher costs and the greater uncertainty around transport for these trips. So the reason why I've shown the breakdown of the different recovery pace depending on the haul or distance of the travel is because the composition of traveler source markets or travel of different distances is a key factor when we look at the recovery for different destinations. So to start with, it's useful to think about aggregate tourism for destinations. So in other words, combining international and domestic into that aggregate, because this is ultimately a key factor when we think about the health of a tourism industry in a country. So this graph here shows the volumes of visitors relative to 2019 levels. So as you can see, if we think about aggregate visitor numbers or aggregate tourists, visitation is expected to recover more quickly in the Asia Pacific region than is the case globally. So both are expected to recover 2019 volumes next year in 2023, but the Asia Pacific region is expected to recover at a slightly quicker pace than globally. And the key reason for that is that domestic travel, which again is expected to recover more quickly than international, makes up a larger share of total tourism in APAC than is the case globally. So you can see that here from the dark blue bars. So domestic visitors accounted for 79% of all visits in Asia Pacific in 2019, compared to 69% for the world in aggregate. And while the domestic share of visitors has increased pretty much everywhere as a result of the pandemic, the key point is that the domestic share in APAC remains higher than elsewhere. And domestic travel in APAC is also expected to recover more quickly than globally. So this is partly because international travel among APAC residents has taken longer to restart than some other regions, such as, say, Europe or North America. And this is because of tighter restrictions on borders and international travel. So what we've seen is there's been some substitution from international travel to domestic travel among APAC residents. And while that's one of the near-term factors, the strong outlook for domestic travel also over the longer term for APAC reflects relatively strong demographic and economic factors. So basically, strong population growth and expectations for an increase in the propensity to travel will drive domestic travel growth in the APAC region. On the flip side, though, international arrivals or inbound travel to APAC is expected to recover more slowly than globally in the near term. So for both the Asia-Pacific region and the world, the recovery of international visitor volumes to pre-pandemic levels is expected in 2025. But in the lead up to that, it's going to recover more slowly for APAC than the world as a whole. So you see that in 2022 through to 2024. And this is partly because of what I discussed on the last graph. So in the near term, tighter restrictions on international travel among APAC countries means it takes longer to restart that international travel. But if you look further out, so 2025 and also in later years, which I haven't shown here, the pace of recovery for inbound travel for APAC is stronger than globally. So near-term weakness for APAC in terms of international travel, but longer-term strength. And another key reason for why we expect a slower recovery in inbound travel to APAC is that the APAC region relies less on short-haul travel in total than some of the other regions around the world. So short-haul travel here is in the dark blue bars. So if you compare APAC to, say, globally or, say, to Europe and North America, you'll see that Asia-Pacific relies less on short-haul travel than these other two major regions. And again, because short-haul travel is expected to recover first, destinations that rely more on this type of travel will also recover first, whereas medium and longer haul travel will take longer. And beyond looking at the region in aggregate, we also want to look at aggregate travel or the aggregate travel outlook across individual countries within APAC. So once again, what you're looking at here is domestic and international visitors combined, so the total of the two. And we're looking at it for 2022 compared to 2019. And the first thing to note here is that nearly every single destination within APAC doesn't recover 2019 visitor volumes in 2022. You can see, though, that there is significant variation across countries. So Japan, Australia, and New Zealand, Indonesia, for instance, up at the top of the graph, have got the strongest outlooks for 2022. But Hong Kong and Singapore, on the other hand, down the bottom, are among those with the weakest near-term outlooks. And it's also worth calling out China here, because although in this graph we have the outlook as being strongest for China, as I said earlier, these forecasts are from late March. So we're currently updating these, and we expect the Chinese outlook will be downgraded quite a bit. Just how much, I'm not sure yet, but it will definitely be downgraded, given the Chinese government has maintained the COVID-0 approach for longer than we previously expected. So this figure here is not, or it's stronger rather than what is representative of our current thinking. And then if we go forward a couple of years, so say to 2024, you'll see there's less variation across countries, and almost all destinations recover their 2019 visitor volumes. So these countries are ordered based on the recovery expected for 2022. So you can see here the variation in 2024 compared to 2022. So the difference between the near-term outlook and the projection for a few years' time. And a key factor driving this variation across the outlook for different country destinations is the share of domestic travel. So as I said earlier, for APAC as a region, a higher share of domestic travel will drive a quicker near-term recovery in total aggregate travel than is the case globally. Now, what this scatter plot is showing a lot of stuff here, so I'll try and make it as simple as possible. But it's basically showing the relationship between the reliance of individual countries on domestic travel and the anticipated speed of their tourism recovery. So the dark blue markers here show countries or country destinations in APAC in 2022, and the light blue markers show the same destinations for 2024. So basically, the way to interpret this scatter plot is to look for the number of destinations in the top right and the bottom left quadrants. These quadrants are showing a positive relationship between the pace of the recovery in tourism and how important domestic tourism is for that market. So what you see is there's a clear positive relationship between these two factors. So the stronger is the domestic presence, the stronger is the recovery in tourism. And you also see that it's stronger for 2022 compared to 2024. So in other words, in the near term, countries with large domestic markets will see the strongest recoveries on average. That's also the case in later years, so in 2024, but the relationship isn't quite as strong. And this graph points to a similar thing. So what I'm showing here is the recovery of tourism across countries in 2022, which I showed before just in aggregate, but I've broken it up into the inbound or international and the domestic components. So the contribution of each to the recovery in aggregate visitor volumes for each country. So what you can see here is the light blue domestic bars are positive for all destinations, meaning we expect domestic travel to recover 2019 levels for basically all markets in Asia Pacific. Some of these will probably be downgraded, but overall we expect the majority of countries to recover their domestic volumes this year. However, by contrast, international tourism is negative for all countries. So international volumes will not be recovered in 2022. And you can also see the role of each in contributing to the total for each country. So destinations with the weakest outlook, so down the bottom of the graph, such as Hong Kong and Singapore, for instance, their aggregate tourism outlooks are driven very much by international tourism. And these countries rely heavily on inbound visitors. So their recoveries will take longer. But up the top of the graph, countries with a stronger outlook, such as China, Japan, and Australia, have relatively large domestic markets. So overall, they'll see faster recoveries. And by 2024, it's a slightly different story. So some countries that rely heavily on international tourists, such as, say, Singapore, still have relatively weak outlooks. And those with large domestic markets have relatively strong outlooks, but there's less of a clear link as what was the case for our 2022 outlook. So the key point is that the role of domestic tourism is still important in later years, but it's less important than, say, in 2022. And this is because by, say, 2024, 2025, inbound or international tourism has had more time to recover. So I've given a summary of the outlook for tourism for different APAC destinations, and I've made the point that the composition of travelers is important. But one area of significant uncertainty I'm going to touch on is the reopening of China to inbound and outbound travel. So unfortunately, we don't have a crystal ball on this reopening, but it's been consistently delayed. So what that has meant is we've had to consistently downgrade our forecasts relating to travel into and out of China. Our current best guess is for restrictions to be seriously or meaningfully eased around October or around that Q3, Q4 kind of period, or that junction between Q3 and Q4. So what this graph shows here is our projections for international air passenger flows for China, which you can see in the red line, the rest of the Asia Pacific region in the dark blue line, and the world in aggregate, excluding China, in the light blue line. So these lines show the volume of passengers compared to 2019 levels. So a figure of 100 is equal to 2019, less than 100 is below 2019 levels. So the key feature of this graph is the gap between China and elsewhere in APAC throughout 2022. So this shows the expected weakness in international travel to and from China for the rest of this year. So as I've said, our expectation for the reopening is we expect it to happen around that Q3, Q4 junction. So most likely, our logic with that is it's most likely going to take place after the Party Congress, because we expect the Chinese authorities will want that to be a success without disruption from any major outbreaks. Previously, our forecast assumed some initial easing ahead of that, but it seemed less likely as time has gone on, and there's still a downside to this outlook we have for China. But overall, what's become clear lately is they're going to have to ease restrictions and end the zero COVID policy at some stage this year. We highly expect that because it's simply too costly to continue, as has become clear with the recent lockdowns. And the impact and uncertainty of China remaining closed is significant given China's key role as a source market for global destinations. So China accounted for 1/4 of inbound visitors and spending to APAC countries in 2019. And Northeast and Southeast Asia were especially reliant on China as a source market. And even if you look beyond APAC, so globally, China had grown to actually be the largest global source market in terms of international spending in 2019, accounting for 12% of all international tourism spending. So globally, destinations are heavily exposed to China and risks around the disruption to Chinese travel. But the exposure is especially large for APAC as a region. And just to finish off, within APAC, some destinations are very highly exposed to Chinese travelers. So what this graph shows is the countries that depended most highly on China for their inbound visitors in 2019. So these are the countries most likely to benefit from the reopening of the Chinese market, but also those that are the most vulnerable to the risk of China remaining closed. So I've excluded Hong Kong and Macau from here because they share a unique relationship with China. So aside from these two, the destinations most reliant on China, or the 19 destinations most reliant, are all within the APAC region, ranging from South Korea, for whom China accounted for around 1/3 of visitors in 2019, to 10% for New Zealand. And in actual fact, in 2019, the only country in the top 20 outside of APAC in terms of reliance on China was Switzerland. So I'm just going to wrap up now with a quick summary of kind of what we think are the key takeaways for the outlook for tourism. So a tentative recovery for global tourism is underway, and this is being driven by a consumer-led economic recovery. So there's robust pent-up demand after 2 years of limited travel and the build-up of excess savings. However, there are risks posed to the tourism recovery from inflationary pressures, which will erode household income to an extent and may have an impact on airfares and therefore travel decisions. Overall, we expect domestic travel will recover first, followed by short-haul international travel. So this means that the composition of a destination's travelers will be very important in determining the pace of the recovery of their overall tourism industries. When we think about APAC as a region, the overall recovery will be supported by the large domestic market, and inbound tourism will recover more slowly than globally in the near term. But in later years, the inbound outlook looks strong for APAC. And finally, as I just mentioned before, China is a key source of uncertainty, and APAC destinations are heavily exposed to the Chinese market. So there's upside risks from China reopening, but downside risks to China remaining closed. So that's a key source of uncertainty when we think about the outlook and projections for tourism to the region. So I'll leave it there, but thank you everyone for listening, and I'm so pleased that you're able to gather in person after such a long break.
Thank you, Michael. Appreciate